Hi there, Serial Trader here. I just made a move on JP Morgan. Markets are trading right now just a little over an hour into the session. So what I've done is a combination position. So I'll just show you the order fills here. So I bought, let's see, 50 of the 100 strike puts for JPM, and that's the 21st of September 2018 expiration, so pretty far out. And those were bought at a net debit of 250. Okay, and I bought 20 JPM 105 strike calls, again 21st of September 2018 expiration, and that was bought at a net debit of 782. Okay, so basically, I'll explain in a second. I also bought 1,200 shares of JPM, and I've put the stop loss at 107.53 on those, which is just below the low of yesterday's reversal candlestick. Okay. Okay. I also closed that Apple Strangle, and I bought it for 17.10 net debit, and I closed it for a net credit of 17.50. So that's a nice little gain on that. Now Apple could certainly keep running, but it was meant to be an earnings play that you'd take profit on immediately. But if there was no immediate profit, it was in a position where you could ride it out for continued profit, which wasn't necessary because it was immediately profitable today. Okay, as you can see here, I got filled at 108.05 on my JP Morgan stock. All right, so back to, let's see here. Back to this. So let me just take the stock off the chart here, the profit graph, risk profile graph. All right, so by getting, it's roughly a 2.5 ratio of puts to calls, okay? So 50 puts, 20 calls, but the puts are out of the money and the calls are in the money. And because of that, it was basically delta neutral. So it was in a position where it could start gaining immediately if it would start going down, or start gaining immediately if it started going up, which I like to be in that position whenever possible. And obviously the purple line's representing now, today, and the teal line represents at expiration, which is a long ways away, 21st of September 2018. Now likely this trade will play out before expiration, but I'll get to why I pick that expiration date. And well, here, let me just add the stock as well. Now the stock changes things. Obviously, it increases the upside delta. But the thing is, since I have such a tight stop on the stock, if it violates that level of yesterday, so yesterday's low, the stock will sell, and then it'll return to this option position without the stock. But I'll leave them combined for now because this is the current risk profile with everything included on JPM. Okay. So I mentioned there was a target of, a minimal target in my opinion. Triangle thrusts are usually exceeded, but they're a good target to start with. Minimum target of 125 or so on JPM. So that would put the position, well over $30,000 US profit. Now, if the thing really falls apart, and let's go look at the chart. So let's say it fell apart and we came down and tested this support level, which was around that $95 point, okay? How would that perform on here? So $95, well, certainly well before expiration, that would still be a profit. But actually, let's take off the stock because that's skewing it. I'd be stopped out almost immediately on the stock and wouldn't be anywhere near 95 holding stock. So let's see what that does. Okay, see, that changes the downside risk profile quite a bit. So if we got to 95, now we're talking, a $15,000 profit, not at expiration. So at expiration, the break even's lower. But again, expiration's a long ways away. So this is a hedge position, but still definitely a bullish bias, right? Which I think is warranted based on the analysis and this overall bullish continuation pattern that we're in, this sideways contracting triangle which is a fourth way within a incomplete impulsive event. So I just thought I'd update you since I just made a move, and we'll certainly keep our eyes on this one as I'm in the position now. All right, hopefully you have a good day of trading. Serial Trader signing off.